and welcome to another episode of Kuvera Insights, where we talk to industry leaders about different aspects of investing. And today we are talking about real estate. Real estate, of course, is very close to Indians' hearts. We love it as an asset class. However, for the last 5 to 10 years, because the returns have not been good, people have started questioning real estate. And we do get the buy versus rent question more often than we would think. To answer these and a lot more, we have two very special guests. We have with us Shubhra Tandon, who is the assistant editor of Financial Express. She has over 14 plus years as a journalist, and she's covered aviation, technology, as well as real estate and infrastructure for the better part of her career. She started her career with the Hindu business line before she joined Financial Express. We also have with us Mr. Dhruv Agarwala. He's the group CEO of RERA Technologies, though you would possibly know of him more from the brands that they manage, which is proptiger.com, housing.com, makan.com, and fastfox.com. He's a serial entrepreneur. He started and successfully exited several ventures across different domains, including education, mining, and fintech. He co-founded PropTiger in 2011 to make the home buying process more transparent and simple for consumers. In early 2017, PropTiger announced its merger with Housing to create India's largest online to offline real estate services players. So welcome, Shubhra, and welcome, Dhruv. Let's start this discussion on real estate now. One of the big things about real estate is price discovery in real estate markets. It's very difficult to know what's the value of what you own till you are either a buyer in the market, in which case, you're anyways going to be paying the offer price, and if you're a seller, then you're going to be paying the bid price, and the bid offer can be very huge and can be very difficult to ascertain, right? So if you look at the past couple of decades and what's happened in the real estate market, do you think there is more transparency now than there is before? And also, where is the market going from here? How do you see it evolving in the next 5 to 10 years?
Sure. I think it's a great question, Gaurav. I think real estate by its very nature as an asset class makes it very difficult, for efficient price discovery to happen. And that's not just only in India. I think that's a global phenomenon. The asset is very heterogeneous, as we know. Transaction costs are very high. There are no sort of futures and options markets which always enable price discovery in other asset classes like equity and commodities. You again don't have professional traders who are sort of buying and selling real estate with high frequency as they are doing in other asset classes like equity and commodities again. And also, frankly, real estate is an emotional product, right? So price discovery always becomes more challenging because it's not as impersonal as something else, and hence preferences also make the whole price discovery process fuzzy. So in fact, what we've seen globally, companies like Zillow and many others, now Open Door, first they came out with what is called the automated valuation models, where you could input details about your property, location, etc. It would sort of throw out an estimated value. Yet that was still not sufficient, and you would often find that the price which it threw out, the actual transaction would take place at a different value. So now there's a complete new set of buyers out, new set of companies out there, including Zillow, Open Door, and many others have kind of launched this product. It's called the iBuyer product.
Anyone in India doing that? Yes.
Nobody doing that yet. I think it's a matter of time before it happens. I think it's a question of transaction costs are high here, especially because of registration and stamp duty, which prevents that. But otherwise, the iBuyer model is a very transparent model. Anybody can go onto a platform, input the details of their property. The automated valuation model throws out a value. They say the more accurately you enter the information, the better the value. Within 24 hours, they will go do an actual physical verification. If it ties in with what you've said, they will buy it from you at that particular value. So that really has changed the game as far as price discovery is concerned, because now you can really go in, input all your details, and get a price at which the buyer is willing to buy you out within the next 24 hours, with transaction costs, frankly, very low. So all the brokerage which you pay, for example, in the US, which could be as high as 6%, is not there. So that's sort of how it's happening. In India, what we found is, at least in the new homes market, some developers have tried to go down the path of discovering prices where they've asked for expressions of interest from interested buyers and the price they're willing to pay, and then sort of let the prices sort of get determined by a demand supply mechanism. But it really hasn't worked out very, very well. I think because there's massive information asymmetry, in this sector. So sometimes people just end up putting prices which tend to be very frivolous, and they don't really end up, determining what the price in the market should be. So I think that's I think a challenge, as I said, for the asset class, in particular. See, in India over the last 10 years, you asked how sort of things have shaped up and where we think it's going. I think between 2004 and 2013, we saw a re-rating of real estate as an asset class. I think anybody who owned real estate before 2004, and even who started buying real estate between, say, 2004 to 8, saw prices in certain areas quadrupling or going up 5 times. That I like to call like a re-rating of an industry. And once that happens, you create a perception in people's mind that this is going to happen going forward as well. But it doesn't happen. Re-rating happens once in a while, as even in stocks, right? There needs to be a fundamental shift in either a product which you've built as a company or a new technology which causes that re-rating to happen. So that happened. And then, of course, things started to go awry, right? Because of, the prices going up at a steady clip, where you could essentially, put down 10% on the value of a home to book it. And within 6 months, that price would go up by 10%. So essentially, you made 100% return on equity, in a period of 6 months. So that prompted a lot of speculators to come into the market, crowded out sort of real end home buyers, and you got a situation where you had lots and lots of investors with multiple properties out there, and developers, frankly, got encouraged by this and said, "Hey, look, this is an easy way to make money for us as well. We launch and it gets sold." They started to take the money they were getting, and instead of constructing, they started buying more land and doing more launches, right? So it became sort of, this flywheel which started moving, and unfortunately a flywheel which, ended up stopping very suddenly and very badly, right?
So just to add, one more question. How much of the speculative froth that we're talking about, right, where people were kind of just looking at the returns on equity, and builders were focusing mostly on how much they can kind of clear. How much of that is out of the market now?
So,
in your opinion, purely in your opinion.
Yeah. So Gaurav, look, we do sort of, market real estate on par of developers, as well as, we sort of advertise, properties on our platform. So, and we have like, 20 plus million visits coming to our platform every month. So I think we have a fair indication of how things are. So, when we started our business, back in 2011, I would say between 2011 and 14, I would say 70 to 80% people coming onto our platforms and buying stuff from us, were speculators and quote unquote investors. Okay. And now the ratio has probably flipped. It's more like, 80% end users and about 20% speculators, if that. And I wouldn't even call them speculators. They're like sort of more sort of, real investors.
Value buyers.
Shubhra, just picking up on that, do you think that the enactment of the Real Estate Regulatory Act, which took place sort of 3 years ago, has that, been sufficient to kind of change consumer sentiment, have brought consumers back to the market? Or you think something more needs to be done, in that sphere of regulation?
So RERA, I think, did help in a way that some amount of demand did come back because of that, and people were confident of buying an asset. But I think one thing that RERA really lacks is the teeth. We do not see RERA as effective as, say, a regulator like RBI or SEBI or TRAI is, when it comes to taking actions on their own, or going out and asking for details from the builders, or from you do register, you do give in the details, but I think on a proactive basis there is very little that RERA does. So which is what is I feel is the most important thing which it lacks. And if that happens, then maybe going forward RERA would be more effective. And I think, and I think the government really needs to look at that from the perspective. Yes,
I think you've given it's a good point, Shubhra. I think the challenge with, real estate relative to the examples you gave, about RBI and TRI, is that the real estate is a state subject, and hence you have state level regulators, while the center has issued central guidelines in terms of what the regulation should be like. Most states have sort of, legislated their own version of RERA.
Right.
And also, I think the zeal with which they are implementing it and enforcing it also varies from state to state. So I think that's a good point.
Yeah, and also, I mean, so I think that is the main important thing that RERA is lacking, which is that, it should be a little more of a stricter regulator like we have in the forms of the other regulators in the country.
Fair enough.
Okay. So if I may understand from you, Gaurav, now that, with the work from home, which is catching pace in the current times and everything, commercial real estate, everybody is talking about, is going to take a back seat. So in that light, do you think that it is a good time for the REITs to come in? I know that Mindspace REIT has done very well. They have been listed at an 11% premium, and they have been oversubscribed, and so is Embassy doing very well. But overall, do you think that this is a good time to invest in REITs when there is so much of uncertainty around commercial real estate?
It's a great question, because there are two parts to this question actually, right? Is this a good time to launch REITs? That's the timing issue. Is it a good time that finally Indian investors have access to REITs? So the second question is unambiguously yes. We need more and more ways to create liquidity in real estate. This goes back to also the point that Dhruv mentioned, right? One of the easier ways to do price discovery is to have more transactions which are publicly recorded, which are publicly available, which set the benchmark prices, right? So REITs are important. Would we have been happier if REITs launched 10 years ago? Definitely. But I think it's good that investors now have this option. Now, having said that, how does the commercial real estate or the risks on commercial real estate affect REITs? I think sometimes what happens is when you're in the middle of a crisis, the risks are overblown. And this is not the first time it's happening. If you look at what happened in SARS, what happened, in previous kind of, similar episodes, and don't focus on India, but look at like Hong Kong and Singapore, which were the epicenter of SARS. Real estate prices fell down tremendously, but bounced back equally fast. So the key question that we have to answer is COVID going to lead to a behavioral change that people will not go to malls, people will not go to watch a movie, or employers suddenly will not have any offices and everyone will work from home? While on the margin, if I look at startups like ours, smaller companies, we have the ability and we have the system set up in place already that we can do remote for as long as possible. But for a lot of companies, for a lot of industry that even we talk to, right, even someone like the AMCs that we talk to regularly, they find it very hard to move all their processes online. Sorry. For them, having that office space is not just a regulatory requirement; it also helps them work faster and work better. Correct. So our view, I mean, again, my personal view here is that we might be jumping a bit too quickly to say that this is going to get extended straight line. So what happens is someone like a large IT major comes in and says 3/4 of our employees is going to be working from home, and it creates a lot of splash. But I don't think it translates to the entire commercial ecosystem here. If I had to venture a bet, I would say things would probably be back to normal in 1 to 2 years. There are significant issues, even for a smaller company like ours. There are significant issues for working from home as a ongoing policy, especially when it comes to, you're expanding your team. Your team goes from 50 to 100. You have 50 new employees that come in, and it's very hard to assimilate if everyone's working from different locations.
Right. So I think offices also, build that community, which is something that, working from homes will not be able to provide. I mean, apart from the teamwork and everything, it also is a more social interaction that is very important for the workflows to sort of move smoothly. So I think that is why maybe in the long term, this a complete work from home may not be a reality, so to say. Yeah. So I take your point on that. Yes.
That's what we would think. Yeah. I mean, I think right now, of course, everyone's thinking about ways to cut their rental, costs and so on and so forth. But I don't think it's a. I think Dhruv.
To quickly share my like sort of 2 cents on this is I think the example you gave, Gaurav, about how things bounced back after SARS. I think one point of difference this time around, my humble opinion is that the technologies we have today versus
Right.
what we had then, I think may just end up, creating permanent damage. And why I say that is, look at the case of movie halls. Now you have the alternative in terms of streaming options, right? And not just Netflix, but
Right.
multiple others. In the case of malls today, already they were under threat from e-commerce, and that's only getting stronger. In terms of work from home, now with all the kind of communication software and collaboration software you have, whether it's Zoom, whether it's Slack, and many others, and also the really, really cheap cost of data on account of platforms such as Geo that we have, I think the push towards making some of these changes more permanent is probably stronger. So while I agree with all of you that like 100% work from home is unlikely to take place, but a lot of companies might say, okay, come to office twice a week in rotation of different functions, so we can actually bring down our infrastructure cost by 2/3 or half. I think there will be some pressure, I think, this time around. But in a country like India, where economic growth is expected to happen at 7 to 8% when things come back to normal over a sort of next decade or so, I think just the growth in natural demand for real estate will, I think, offset that. But I think this time around we could see a slightly more permanent impact on commercial real estate.
That's a fair point. I think technologies do make a difference, but we'll wait and see how this plays out. But I think it's a tug of war. Yeah, and at the end of the day, if actually we are able to attract hundreds of new companies to come to India, then a lot of this discussion might just become mute on that point.
Exactly.
Fair enough. Fair point. I would definitely want to talk, spend some more time on to talk about the future of real estate, right? Like, where are we going from here? And as an individual, and also we get a lot of queries on our platform, is when will real estate in India become a reality? So just to give a quick background to people who don't know what fractional real estate is, fractional real estate allows you to buy just a partial ownership of a apartment or a commercial project. So in effect, it makes it easy for you to diversify, right? Otherwise, real estate, the other problem is diversification. It's very hard to diversify in real estate because in reality, you will end up buying one, maybe two houses, maybe three houses. So the location becomes critically important. So fractional real estate allows you to have, say, 1/10 of ownership in a flat in Gurgaon and 1/10 of ownership in a flat in Bangalore and one in Calcutta. So suddenly you have a lot more locations that you can be exposed to, and that improves your returns on a portfolio level. So, Dhruv, if you would like to start on this, what do you think about fractional ownership in India? And I know there are a couple of startups working on it, but in reality, when do you think that this can become a seamless experience for the end user?
Sure. I think it's a great question, Gaurav, and a great observation. I think that for a country like India, where affordability is a challenge for real estate, and as we always advocate, being in the industry, that is very important for people to get onto the ladder early on in life, right? You just can't wait to get to a certain stage in life where you can afford a 50 lakh home or a 60 lakh home. What if you can get into the real estate market, when you're in your early 20s, by buying a fraction of a property, which then if real estate as an asset class does well, you kind of get your return on that and you trade that in for a real home, right? So I think it's a great way to allow people to enter into the real estate market much earlier on, in their investment lives. I think the challenges for fractional ownership, I think, are more regulatory in nature than anything else. And as you rightly observed, there are startups doing it, and the structure they are kind of using is a very cumbersome structure. So everyone sort of invests into a company, hold shares in the company, then the company buys the asset. You issue sort of NCDs as well, and then whatever interest, whatever rentals are collected on the commercial property which is bought by that company gets paid out as interest on the NCDs. So it's a pretty complex structure. The other thing is, if you want to get out of the investment, right, because one of the biggest advantages of fractional ownership should be liquidity, right? And ability to transact real time. That also gets compromised if you have to sort of buy and sell shares in a company, right? And I think this is basically being done to avoid sort of any regulatory issues, given the fact that there is no clear regulations on this. It could potentially be seen as a collective investment scheme, which then comes under SEBI. So there are many restrictions there. But otherwise, frankly, sort of new technologies such as crypto and blockchain allow you to frankly tokenize real estate. So the fraction which you own could actually become a token, which is then free.
How would that work, Dhruv? If you can just talk about how would that work? How would tokenizing real estate actually work?
So look, so basically, it's almost the way a REIT would, the unit in a REIT would trade, right? It's very similar to that. So you put in 5 lakhs, let's say, in a property which is worth 50 lakhs, right? And let's say that a minimum is a 5 lakh ticket. So you get like 1 token, right? Out of the 10 tokens, which the property is worth, and then there is the fractional ownership company which kind of issues that token, then becomes the market maker. So when you want to sell, there is the willingness for them to buy and then onward sell it. And so till sufficient liquidity doesn't develop in the market, you need to have the market maker. And beyond the point, then the trading happens. So I think now with the current guidelines around crypto, which is now once again been allowed back in India, I think tokenization, could be the way forward, for this. And look, this will also allow you to build a global portfolio ultimately, because imagine, real estate getting tokenized across the globe, and then the ability for you to buy real estate anywhere in the world in any sort of quantum is what is required. And I think that's going to also help real estate in a significant way, because otherwise pockets of capital which hitherto were just not there to come into real estate, you suddenly will find a massive inflow, into that. And you're kind of seeing what the impact is. I think the point Shubhra made, that the REITs which are there in the market, are sort of doing very well in terms of well above the, issue prices, and also, the oversubscription of the latest, REIT issue. So I think it has huge implications for financing in the sector, as well as allowing people to transact in this sector and get in early on. I think you need a regulatory framework, I think, specifically around this in order for this to take off.
Dhruv, I wanted to ask you. So, do you think that the rental housing would sort of make this any easier for residential real estate? Could and then also the REITs in residential, could it be a reality sometime soon in India?
Look, I would say that it's going to first take off for commercial before residential, for the simple reason that residential yields are very low, but commercial yields are higher. When I say low and high, I mean commercial could be anywhere between 6 to 9% depending on what property it is, and residential could be anywhere between 1 to 3%. It's very low, so I think you'll first see this trend, and even all the new startups who are doing fractional ownership are on the commercial side of things. But yes, there are sort of new interesting asset classes which are coming up even in residential, which will sort of permit that. In fact, that's a question which I would kind of now lob it back to Gaurav, because as you know, the investment in residential real estate is a negative carry trade, right? Even today, with mortgage rates being sort of at multi-year lows, around 7% ballpark, and with the residential yields at about, anywhere, as I said, between 1 to 3%, and the fact that we've not seen a lot of capital appreciation in the last 5 years, investing in residential real estate has been a negative carry trade, right? Do you see this changing sort of going forward? Because it's important for this to change, for it to become an important asset class, for investors. And do you see sort of, co-living, which is also addresses Shubhra's question? It's a very interesting sort of differentiation to renting, right? Or a different alternative to renting, rather, which could change the dynamic for this asset class, because there the yields, get sort of increased to almost 7-8%. Because of the nature of the property which is provided to consumers, and the fact that you take a bedroom unit and in many instances split it into beds and rent it out as beds, as opposed to a full apartment.
An operational efficiency play. So of course that operational efficiency adds to your rental yield. Going back to your first question though, right? In purely asset allocation terms, if you think about real estate, right? So real estate is a long tenure asset play.
Yeah.
In India, they used to say, right, the grandfather buys it for the grandkids. So we call it an intergenerational asset. The reason is, as you rightly said, right, like there will be pockets when real estate will re-rate. You just don't know when those pockets will hit. But if you look at very long-term financial data, real estate will give you inflation plus something.
Right.
Effectively, at the end of the day, after all your costs and everything, it might come as capital appreciation or it might come as rental yield, right? So in financial markets, though, what happens is that this concept is mostly lost with people. Telling someone that, look at it as an intergenerational play, and you're buying it not for yourself but for your family's security, for your future, it's a very hard. There is a very strong recency bias. So more often than not, assets are in demand when their past 3 to 5 year returns are fantastic, and that's when people will kind of start questioning, oh, how can I buy? And you'll see the demand increasing, right? Very recently we are seeing it with gold, right? Gold did nothing for 7 years. So this is not just purely a problem with real estate. The larger issue that happens with real estate is that even if people understand that it is a long tenure asset, that I should have a little bit of it invested in my portfolio, asset allocation for real estate is really, really hard because it's so chunky. Which is where our interest in REITs and our interest in fractional real estate. A lot of people are beginning to understand, hey, you know what, real estate is not highly correlated to either equities or to gold, which is a good thing. It's not a bad thing. There will be this one period where real estate will do fantastically well while my other assets will not be doing so well, and it's good for me. So outside of that, owners, neighbors envy, owners pride argument that was given for the longest time, that you're buying it for this. From a pure asset allocation perspective, also, it's a great asset class to own. People have to understand that it's a long tenure asset class. It will give you inflation plus returns. It doesn't have very high correlation with any of the other liquid asset classes. The key problem that we see is that real estate being chunky. How do you justify, right? You're 25 years old and you want to buy a lakh rupees apartment, and suddenly it's 80% of your, or maybe 150% of your total income, because you're taking a loan to buy it.
You're taking debt, yeah, exactly.
And you're taking debt to buy it, right? So suddenly you've gone to an allocation which is like, and they're genuinely scared. What if it doesn't do well?
This is one question for you, Gaurav. Doesn't a REIT unit take care of that as well?
It does.
That is another form of fractional ownership, right?
Exactly, which is why what I said to Shubhra is that would we have been happier if REITs were available 10 years ago? Of course. In terms of timing, it's very hard, but as an asset class, some exposure to real estate is good. And what we have seen and what we have seen in financial data going back, and real estate is one of the longest. You can get like centuries of real estate data for cities like London and for some of the other real estate markets globally, compared to stocks and all, where the data might be only 80 to 100 years old. Um, when the asset is not doing much, is actually a good time to accumulate.
Although,
You
it's
don't
very
want to be
interesting.
chasing.
Sorry to interject,
Sure.
and I'm sure you're familiar with this. I think what the Case-Shiller index shows, though, is that they chose 1890 as sort of the base year,
Right.
and they said that there's a massive tendency for real estate prices in real terms to sort of revert back to prices in 1890, which essentially means, barring periods of disruption where either things are very good or things are really, really, really bad, which I think goes back to what you were saying about that the prices ultimately in mature economies track inflation because it's a real asset. Yeah.
Right. It's just that it's a safe asset, and we to a certain extent, right? I mean, if you can afford a house, one of the big things about it is, right, you're very unlikely to sell it. It's one of the best insurance policies you can buy. You will only sell it. I mean, like the Indian fascination with gold. You never sell your family gold. In a way, it becomes an insurance asset. You didn't buy it as an insurance asset, but just your propensity to hold it and the fact that you don't trade it. So when things are really, really bad, that's when the family gold comes out. So it becomes an insurance asset, though it was not thought of in that sense. And real estate, to a certain extent, also satisfies that property. Right. I think actually, I just lost my thought there. I'm so sorry.
Right?
Yeah. No. That's what I said. I mean, yeah, we are very good. I mean, one thing that along the same lines, that one of the questions I have, and it's a bit difficult to kind of enumerate, but Shubhra, if you can shed some light on this. This is something that we hear a lot from our employee base. They're all young, right? They're all in Bangalore. One of the reasons that they don't want to buy real estate is because they're not very sure how long they will be working Bangalore. It's a much more opportunistic younger generation. It's a much more mobile young, not just within India. For all you know, within 1 year they might have a job in Australia, or they might be in the UK or US. In that setup, do you hear a lot of this, that buying suddenly is not as attractive for individuals? Forget all the near-term performances and all of that. Purely based on that, hey, I'm not sure whether I'll be around or I'll be there to actually enjoy this asset that I'm building.
Yeah, so I guess that's what we also hear from the builders and also from the customers, is what I get to understand, that now there is an increasing thing of, better to be on rent rather than buy, because you don't know how long you're going to be in that location. And the young generation is definitely not looking at ownership, and which is, I think, reflecting in the numbers also. If you look at the absorption rates, if you look at how they have been panning. I guess, I mean, right now, of course, we are in the midst of a pandemic, so we've seen a 90%, 80% decline kind of, in the absorptions. But I think overall, also there for the last couple of years, that thing was there, that the youngsters, the millennials, as we call them, are not looking to buy apartments that or houses that readily. They are instead looking at doing, going in for rents. And I think that is the reason why now the talk about rental housing is also gaining so much momentum in India, that till now we were not hearing too much about rental housing. But now, in fact, in one of the builders in Bombay is actually making houses for rental purposes only. So they are making 1 BHKs, 1.5 BHKs, to just give it out on rent, because that is what they see that the clear demand is for. The house sizes are shrinking. They are not looking at very huge houses like it used to be. The house sizes are shrinking to cater to this new demand that is there from the youngsters. So yes, there is a change definitely in the buying patterns that we are seeing of the consumers. Yes.
I'll just add to that, Shubhra. I think I think that this whole trend which you were seeing pre-COVID, right, amongst the millennial population and even sort of Gen Z, the fact is that they are used to sort of a gig economy. They don't want to necessarily work full time. They're happy to kind of work part-time, and companies are more than happy. There are platforms which allow these people to take up these part-time jobs, gives them flexibility, allows them to, work from anywhere they want to. Even in the pre-COVID days, this generation also believes more in experiences as opposed to asset ownership. So all of that trend was sort of, leading towards people saying, hey, why do I, block a large chunk of my, capital into an asset, which really is utilitarian at the end of the day, right? That's how they will. And so that trend was clearly, if you look at a 10-year trend, I wouldn't say that it was making a dramatic shift in like over the next couple of years, but as a 10-year sort of view, one could have sort of prediction that yes, preferences would shift more towards rental as opposed to buying. But I think what's happened with COVID is this 4 months of lockdown have made all of us realize that the only safe haven for us really in this world is our own homes, right? It's no other place, frankly. Offices have shut down, countries have thrown you out. People couldn't come back into their own countries. I mean, it's crazy. It's unheard of what's happened, right? The amount of restrictions placed on us as humankind has not been seen, I think, in a long time, right? Or if ever, for most of the people, alive today. I think that's fundamentally, I think, going to change the way people, relate to homes now. And I think people begin to realize that, look, they need to have this one place which they can call their own and which no one can ask them to leave, in the event of such a pandemic, right? Where, they control their hygiene standards, their own safety. But even if you're in a rental home, the landlord could panic and say, okay, no, it's time to pack up. I want to sell my home. You're in a co-living space, right? The safety hygiene standards may or may not be up to your own standards. So I think the relationship which people will have towards their home, I think would have fundamentally been altered, by the pandemic. And also one more thing, in terms of spaces, I think reason why developers were making smaller spaces was because of, affordability issues. But now I think having been at home for so many months, especially in Mumbai, the need for a balcony, the need for a backyard, etc., would be felt, right? So I think that trend also might change. And people might start, moving towards the periphery of the cities because it's much more affordable there. And that also, there's a work from home kind of shift. You could end up, living far away and, work from there and actually have a bigger space. So I think some of these things might change now over the next couple of years because of the pandemic.
So I missed out mentioning it that yes, now that the builders, for whatever I've been speaking to for the past few months, have been saying that they are seeing this change that, even the youngsters, even the millennials are thinking of buying accommodations, and which is what has resulted in some of them doing very well. And online is something which is gaining a lot of traction also because of this, because the youngsters are more comfortable in doing things online. So that trend is also there. So yes, there has been some change that the builders are saying, but I think we'll have to wait for some more time to see whether this actually becomes a trend or if it goes like this.
See, with real estate particularly, I would say, social trends matter a lot. For example, in India, there is a very strong social trend about owning gold, right? If you look at China, if you look at Hong Kong, if you look at Singapore, people are or youngsters are deemed more marriageable if they own their own apartment. There's actually a very strong social construct where one of the first when you start working is you buy your own apartment. It's almost like that kind of coming of age thing, which it's something which I've always wondered why we don't have that in India, because historically in India people have loved real estate like no one else's business. For the longest time, it was one of the few places where you could park a decent amount of money, and people would buy apartments, and people would buy homes, and people would buy whatever they could afford. So sometimes I wonder why we never made that leap. While when I was working in Hong Kong, or when I'm in Singapore, and definitely we hear this from mainland China a lot. The social construct around as soon as you start working, you should start thinking about owning a house. It's really, really strong.
It's even in India though, I'm like in America, you have this American dream concept, right? Which is like a nice house with a, white picket fence and a backyard, right? Yeah. But in India also you have roti kapda or makan. So in that sense,
true. Yeah.
There is sort of a social pressure as well, to have sort of, have your own home. I think it's just a question of, we've been very westernized over the last 4-5 years, right? With the whole startup economy, and we've seen this in automobiles, right? It previously people wanted to own their own cars as well, right? Which is the whole proposition of a nano, right? That you don't have to own your motorbike anymore. You straight away jump to a small car. Of course, it failed for different reasons because of the way it was marketed. But now, people are saying, hey, I'll just use Ola and Uber, right? So I think that probably was driving this change towards wanting to rent. But as I said, this pandemic may reverse that. And again, as everything we discussed before, it'll be in tension, right? Like for commercial real estate, we spoke.
Of course, of course. And yeah, things never sway one way too far.
Exactly.
They always have to come back. Any other questions?
Yeah, Gaurav, I just wanted to ask you. So one crucial thing, that is this a good time to buy property, because then there's so much of uncertainty that is there around. Right. So is this a good time to buy a property? What would be your view on that?
Yeah, so our view on most assets are actually very simple, right? As an asset allocation play, it's a good time, right? But which is where REITs become important, which is where some of the partial ownership plays become important, because they allow you to, even if you have a 10 lakh portfolio, to have a 1.5 to 2 lakh exposure to real estate, right? Do we think that is because we expect the prices to revert or bounce back? The whole key about asset allocation is, right, like you hold an asset and you keep on rebalancing periodically. So from here, if real estate prices go down, you buy more real estate. If they go up, then you sell and you rebalance to your original asset allocation. Right? It's an easier and a simpler way of doing things than trying to predict where the market will go, which is absolutely hard, right? I mean, there is an argument. There are 5 arguments that can be made why real estate should rally from it. Yeah, rental yields are low, but look at real yields. Real yields are low and they're going lower still. Rental yields will always be positive. I should not say always, but hopefully you will never have to pay someone to stay in your house, right? So at least you can kind of construe that worst case scenario, you will leave that house empty rather than paying someone to stay in your house. But real yields globally have become negative. So in terms of asset yields, or in terms of kind of efficiency, in terms of people, how they perceive an asset class, there are a lot of reasons to believe real estate should do well. It has not done well because of structural reasons, because of some of the froth that Dhruv mentioned. Like you mentioned, RERA didn't have the teeth that people would want it to have. Structural impediments are near term. It might take 2 years to clear them up, 5 years to clear them up, 10 years to clear them up, but at some point in time, things will sort themselves out, right? Hopefully, our demographic premium, our demographic dividend will step up. There will be a demand for housing. There will be a demand for. It'll start with low-income housing, then it'll go to, slightly bigger houses, and that's how countries become rich, right? It's not like the American dream always was to have a 4-bedroom, huge house with a backyard. That's what it became after 250 years, right? So some of these things do take time. We do have the population to demand a lot of real estate. We just have to make sure that they are wealthy enough to afford one. And I think in India, that's the issue.
Yeah, so that just brings me to my last question for Dhruv, that where do you see the trajectory for the prices of residential real estate going from here? Is that, what is your view?
So look, I think, Shubhra, I mean, this, of course, there's a sort of short-term horizon, medium-term and long-term horizon, on prices, right? I think I fully agree with, the assessment which Gaurav just made, that, if you just look at rates of urbanization happening in India, right? We saw what it did to China, right? I mean, real estate prices went through the roof when you had so many millions and millions of people coming from the hinterlands, to the big cities of Beijing and Shanghai. And frankly, it was not just those 2 cities. There are a bunch of other cities where you've seen real estate prices go up. I mean, we in India today, sell about close to 250,000 new homes. And in China, it's about the number is anywhere 10 to 11 million, right? Population numbers are very, very similar. So again, just given sort of long-term trends, I think there will be a massive demand, for residential real estate and then commercial real estate going forward. Just given the fact that we are growing as an economy. See, China today is about 12 or 13 trillion. India is about 3 trillion. Imagine if we just double what that means in terms of wealth creation and the ability for people to buy homes. So I think long term, I have no doubt in my mind that real estate is going to be a very, very important, asset class, and sheer demand as people sort of come into, big towns will have an upward pressure on prices, not sort of a downward pressure on prices. Okay. See, in the short term, clearly people are, in the throes of the pandemic even now. People have experienced job losses, salary cuts. So clearly there is an issue with, current consumer sentiment, not just with regard to real estate, I think with regard to everything else. So in this situation, you may find people postponing their decisions to, buy homes, for the next 3 months or 6 months, at best. And beyond that, they'll come back into the market. So you might see some short-term pressure, on pricing, but that too will be very selective. I think people who can afford to hold and not sell, whether they are like, investors or whether they are developers with strong balance sheets, if they can afford to hold, they will wait. They will not bring down prices. People who are desperate to sell, it could be individual investors who have an urgent financial need. They may sell at a, very attractive price, or developers with sort of weaker balance sheets who need to manage cash flows may give, larger than normal discounts in order to sell their property. So you'll find pockets of distress where people will bring down prices significantly to sell, which is why I think, we were speaking about value investors in the beginning, right? So this is an opportunity for value investors to come in and take advantage, of these sort of pockets where attractive prices will be available, and also for end users. I think it's a good time, and I always like to say, for an end user, it's never a bad time to buy property. If you have the financial wherewithal to do it, you should do it, because it's an asset, which you're taking on board to live in. You're not looking at it from the point of view for financial return. So I think short term you'll see pressure in pockets. Long term, I think you will see an upward pressure on prices as sort of demand is going to be very strong as we see urbanization and the economy growing.
Okay. Perfect. Thanks, Dhruv. Thanks, Shubhra. I think that was a fantastic discussion.